Viewers, welcome to Dr. Vijay's lectures on accounting, lecture number 7. We are with special journals, also known as subsidiary books or subdivisions of journals. Means we are going to study how journal books and their ledger posting is done by accountants in business firms. Bookkeeping in practice. Do the business firms keep all their transactions in single journal book as we had been doing so far? No. A big no is the answer. They keep cash book for journalizing all cash transactions. They keep separate day books for journalizing purchase and sale of goods on credit and for purchase returns, sales returns and other such transactions in goods which does not involve any remittance. And they keep a journal proper in the pattern of general journal for recording the rest of the transactions, that is residual transactions. Besides the entries for residual transactions, non-transaction entries like opening entry, that is entries made even though actually there is no transaction, rectifying entries, adjusting and closing entries, etc. etc. 2. Benefits of keeping special journals. First of all, to avoid the inconvenience in recording all transactions in single book in a big firm where thousands of transactions take place every day at its different centers, departments, offices, and even some of which located in geographically distant places. The second benefit is to minimize the labor involved in journalizing and ledger posting considerably. While doing ledger posting from special journals, we will understand how far the ledger posting work can be minimized if special journals are used. Even in modern computerized accounting systems, the special journals are followed instead of the conventional single journal system. You have seen the accountants of business firms keep 3 kinds of special journals. 1, cash book. 2, the trade journals like sales day book, purchase day book, etc. And the third is journal proper, which is in the format of general journal. The third one, the format is familiar to us all, general journal format. Next, cash book and the trade journals. The models of cash book and trade journals are shown in slides 3 and 4 respectively. Let us go to slide 3, model of cash book. Here, cash book is like a ledger account. Look at the model. Cash book has debit side and credit side. Both in debit side and credit side, there are columns for, amount columns for discount, cash and bank. 3 amount columns on both the sides. So, cash book is, this type of cash book is known as 3-column cash book. Even though known as 3-column cash book, if the firm is regularly operating 2 or more bank accounts, there should be separate bank columns for each such bank account. Suppose the firm has regular bank operations with SBI and with Lord's Bank. Then the cash book of the firm should have 2 bank columns, one for SBI and the other for Lord's Bank. So there will be 4 amount columns on both the sides. In cash book, all receipts of cash, whether it comes to cash box or to bank account, all receipts of cash should be recorded in debit side. All payments of cash, whether going out of cash box or going out of bank account, should be shown on the credit side of the cash book. So, recording transactions in cash book is very simple and easy. No need of studying any rules or anything. Simply understand receipts of cash, whether cash comes in, it should be recorded in debit side of cash book. Whether it is coming to cash box or to bank account. Where it goes out, it should be shown on the credit side of the cash book, whether in cash box or going out of bank account. Simple thing. Let us look at the postings given here in the model. Some transactions are posted there. This is based on the Sabu's example itself. Look at the debit side. In January 1, debit side, to balance brought down. In cash column 6,000, bank column 12,000. That is opening balance. Opening balance is shown. Next in debit side, January 7, to sales $78,000 in bank column. We know in Sabu's firm, there is a collection from sales 70,000 which has come to bank account. That is shown. To sales, bank account. See, journal entry is only this much. This is very simple. Now let us look at the third posting in debit side. You cannot call it posting, it is journal entry actually. The third entry, January 8 to bank, C mark is given ledger folio column and in cash column 9,000. See, look at the credit side now. On the credit side, first item, January 8, by cash, C mark is given 9,000 in bank column. This is actually a contra entry. Contra entry means entry for a single transaction, entry coming on both the sides. This occurs in two cases where money is withdrawn from bank to cash box, to till, where money is taken from bank for the purpose of cash. One situation. Second is where the money is deposited from cash to bank account. Remittance from cash to bank account. First one is withdrawals from bank to cash. Second one is remittance from or deposit from cash to bank account. See, the problem is, think of cash drawn from bank to cash. Where cash is drawn from bank, money goes out of our bank account. So it should be shown under credit side bank column. Money comes to cash box. So it should be shown in debit side cash column. That is what is shown here in this entry. Look on the credit side, by cash, C mark in bank column. Because money goes out of the bank account. Amount to be shown in bank column credit side. And look at the posting shown there. Posting amount is shown in bank column, so the posting is by cash. Okay, and in the debit side, the third entry, money comes to the cash box. Money taken from bank for cash, so money comes to cash box. So in cash column debit side 9,000 is shown. The entry is to bank. So where the posting is in cash column, entry has to be to bank. Where the posting is on bank column, entry has to be by cash. And this is C mark. With C mark it is closed. Means for this transaction, both the entries are in the cash box itself, on both sides of cash box. So there is no posting in the ledger for this transaction. There is no posting in the ledger for this transaction. That is why C mark is given in ledger folio column. Similar such entry, contra entry, we will see one more model we will see. Look at the debit side again, the fourth entry, January 12 to capital in cash column 20,000. You know, in Sabu's firm, Sabu has brought in 20,000 rupees additional capital in cash. Money comes to cash box, so shown in cash column 20,000. To capital is given. Here I am telling one more point. See, in the posting, whatever posting is given in the details column, the name of the specific account where the corresponding posting should come, that itself should be shown. Here it is shown to capital because the corresponding posting should come in capital account. See, if you want to add any further information in cash book, you can show that as a narration bracket below the posting. In cash book also you can show narration like journal book, but the very very important, as in the case of journal, in the case of journal we know in journal entry exact specific name of the specific account should be shown. This additional information you can show in bracket as narration. Here also the name of the specific account should be shown in the entry, and below that in bracket if you want you can add narrations, additional information. Okay, you understood that. Now look at the next fifth entry in the cash book debit side. Two roll-ins, 300 in discount column and 19,000 in cash column. See, here in Sabu's firm, roll-in gives cash 19,000 and 300 we have foregone. Discount allowed. See, that transaction is shown. Look, January 14, 2 roll-ins. In discount column 300 and in cash column 19,000. In cash column, exact 19,000, that much cash only we are getting, that is shown. And in discount column, adjacent place in discount column, the discount is shown. 2 roll-ins is the entry. Now look at credit side. Second posting on credit side. Wages given in cash 300. No, money goes out of cash box, so posting 300 in cash column. By wages is the entry. By salaries 8,000 paid through check. So money goes out of bank account. So shown in bank column 8,000 and salaries is the posting by salaries. Next is 1,200 taken from bank for personal use by Sabu. By drawings and in the amount column, bank column, the amount is shown. Similarly, Mada Interiors, we pay them 14,500 and they forgo 500. We are earning a discount of 500. So it is shown by Mada Interiors. In bank column 14,500 because 14,500 only goes out of bank account and discount is shown in discount column adjacent to that. Okay, now the last one is a contra entry. Both sides it comes in the same row. Please see, January 15 to cash 35,000 in bank column and January 15 credit side in by bank in cash column 35,000. See, what is this? What is this? Money deposit from cash to bank. Money goes to bank account, so it has to be shown in bank column debit side. There the posting is to cash. Contra entry C mark is given in ledger folio column. Money actually comes to goes out of cash. It goes out of cash. So under credit side, 35,000 is shown in cash column. Against that, the posting is by bank. See, the amount is shown in cash column, so by bank. Closed with C mark. In debit side, amount comes to bank account, so shown in bank column, and the posting is to cash. C mark is given. Okay, this is how entries are to be made in cash book. We will work out it again, then you will study it clearly. For the time being, it is okay. Model of trade day books, purchase day book, sales day book, etc. It does not have debit side and credit side, only a statement form. First is date column, second voucher number column for recording the number of the source documents. Next is name and address of supplier customer in case of purchase day book supplier and the case of sales day book customer. Ledger folio column for recording the folio number of the ledger account while posting to ledger account, ledger book. Details column for showing the details of goods supplied, list price, then discount column for showing in a trade discount, taxes, and the final amount payable or receivable. Recording it very easy, does not require much explanation. In the classrooms, while you are working out, these details of goods supplied, list price, discount and all may not be given, and so you can avoid all 6 columns. After ledger follow column, only amount receivable payable. Slides 5 to 8 are showing the transactions of Sabu's firm for January, month of January. Sabu is advised by his consultants to keep records of transactions from the very beginning in special journals. So, we are going to prepare special journals of Sabu from January 1st onwards. Out of the transaction of Sabu's firm for January given, whatever to be shown in the journal proper, that is residual transactions, they are shown here in blue color. The transactions to be recorded in cash book, that is cash transactions, it is shown in red color. And the transactions to be shown in day books, that is credit transactions in goods, they are shown in black color for easy identification. to help the student to identify the different types of transactions easily. In slide 5, there is the values of assets and liabilities inherited from his father on Jan 1st. It is shown in blue color. Cash in hand and balance at bank is shown in red there because it is already recorded in the cash book. It is to be recorded in the cash book also. How to pass the opening entry we all know, so we are not going to the details of this right now. Let us proceed to the next slide. Slide 6 contains transactions of Sabu's firm from January 6 to January 11. On January 6, there are two transactions: goods supplied by Joji traders for 2,000 on credit and sold goods on to Rollins on credit $20,200. The first one to be recorded in purchaser's day book, second one to be recorded in sales day book. Both are credit transactions in goods. Next 4 transactions are cash transactions. That is shown in red color. Sold goods for cash, $78,000 received through account transfer. It is cash comes in. So to be shown debit side of cash book to sales $78,000 in cash column. Next is drew from bank for cash. It's a contra entry. Cash comes from bank account to cash box. So in cash column it is shown debit side. In bank column it should come on credit side. So in debit side you are showing in cash column, so posting is to bank. In credit side you have to show in bank column, so posting is in as by cash. C mark to be given in ledger folio column. Next is wages paid for unloading goods. Cash goes out of cash box, so uncredited by wages in cash column 300. Next is paid salary to salesman by check to come on credit side in bank column, by salaries in bank column $8,000. The last one, January purchased furniture and fittings for $15,000 from Mada Interiors. This is not a purchase of goods on credit. It's a purchase on credit but of furniture and fittings to be used as fixed assets. So, it should be recorded in the journal proper. A residual transaction. So, Sabu's firm from January 12 to January 14. On January 12, Sabu has taken goods of the value of 500 rupees for dollars for domestic use. This is neither a cash transaction nor a credit transaction in goods. This is goods taken by Sabu for domestic use. We know the entry drawings account debtor to purchase account. This has to be shown in journal proper. A residual transaction. Next, on January 12, Sabu has introduced additional capital 20,000 and has drawn 1,200 for his personal purpose from bank. 2 transactions, both cash transactions, to be shown in the cash book. The first one is in debit side, cash comes to cash box 20,000. So in debit side to capital 20,000. And next is drawings. Money goes from bank. So on the credit side, by drawings in bank column 1,200. The next 2 transactions are returns of goods. First one is returns of goods to Joji traders, purchases returns outwards, to be shown in returns outwards book. And second is returns inwards, sales returns, goods returned by Rollins, a customer to the firm. So to be shown in returns inwards book or sales returns book. The next 2 transactions of January 14 are both cash transactions, but there is discount also. So whatever cash is received or paid to be shown the cash column, bank column, wherever, but discount is to be shown against that in discount column. Look at first transaction. The firm settles the account with Mada Interiors, remitting 14,500 account to account transfer. Mada Interiors agrees to forgo $500. We are earning a discount of $500 to be shown on the credit side because money goes out of bank account. So on the credit side of cash book by Mada Interiors in bank column 14,500 and in discount column 500. The last transaction, roll-ins from whom the firm has got $19,300. Firm should get $19,300 for goods sold, gives $19,000 in cash, and the firm treats his account as settled. So cash comes in to be shown in debit side of cash column to roll-ins 19,000. We are getting only that much. And 300 is to be shown in discount column against that. Slide 8 shows the transactions of Sabu's firm for the period from January 15 to 31st. First one, January 15, remit to bank $35,000. It is a contra entry. Cash goes from cash box to bank account. So under credit side it show in cash column and debit side in bank column. Money comes to bank account. So in debit side to cash in bank column 35,000. On credit side by bank in cash column 35,000. C mark to be shown in ledger folio column on both the sides. Next is issued check for rent to be shown on credit side bank column by rent due bank column 9,000. Next is purchase goods from Meadows paid by check on credit side of cash book by purchases bank column 32,000. On January 20, sold goods to James & Company is a credit sale of goods to be shown in sales day book, just James & Company $40,000. On 21st, there are two transactions. Purchase goods $41,000 from Bajaj paid directly. So on cash book credit side by purchases $41,000. And next one, by Joji Traders in bank column $20,000. On 22, sold goods costing $30,000 to Khan Brothers is a credit sale of goods to be shown in sales day book, just to Khan Brothers $45,000. Their cost is $30,000 all, you can show in narration part. Commission paid to Gururaj agencies to be shown on credit side of cash book by commission paid cash column 3,000. Sold goods to Rajan Company 14,900. It's a credit transaction, credit sale of goods to be shown in sales day book, Rajan Company 14,900. Raj allowed discount 100. See here, actually we know firm should pay $15,000 to Rajan Company. We are settling it through sale of goods to him for $14,900. So $100 they are foregoing. So it is an earning for the firm. It cannot be shown in cash book because unless there is a cash coming in or going out to be shown, discount you cannot show in the cash discount column of cash book. So here you can pass it as a journal entry in journal proper. Rajan Company debtor to discount received 100. The next two transactions, interest received $21,500 from Miranda in final settlement. In that transaction, there's a discount of $500 to be shown in cash book in debit side to Miranda in cash column 21,500 and against that in discount column 500. Next is interest paid to Asad Bank on credit side of cash book by interest paid in cash column 2,250. Payment is made in cash. James & Company returned goods of value of $1,000, that is sales returns, to be shown in returns inwards book. James & Company $1,000. Next is cash drawn by Sabu for personal use. It is drawings. Money does not come to cash box. It is taken by Sabu for personal purpose. So on credit side of cash book, by drawings in cash column 5,000. Money goes from cash box. Local taxes paid 2,000. Again on credit side of cash book, by local taxes paid 2,000. Recording transactions in special journal. First we are taking journal proper. There we are entering first the opening entry. Opening entry we know is by debiting all asset accounts and crediting all liability accounts and capital account. That is very familiar to us, and so no more further explanation. In journal proper for residual transactions. On January 11, furniture and fittings account to Mada Interiors. Purchase of furniture and fittings from Mada Interiors on credit. This cannot be shown purchase day book because not purchase of goods, cannot be shown cash book. So journal entry is passed here. Next is drawings account to purchases, $500, goods taken by proprietor for domestic use. Here also you cannot show in purchases day book because not purchases, cannot be shown cash book, not a cash transaction. So entry shown here. The last one is Rajan Company debtor to discount received $100. The other part of the transaction is shown sales day book. So this discount alone cannot be shown in cash book. So we are showing it as a separate journal entry. Rajan Company debtor to discount received $100. Transactions in cash book. Cash book has debit side and credit side. We have seen already. On both sides there is discount column, cash column and bank column. Where cash comes in, you have to show in debit side. If comes to cash box in debit side, cash column. If comes to bank account, debit side, bank column. If cash goes out on credit side, if goes out of cash box on credit side, cash column. If goes out of bank account, credit side, bank column. That all we have seen. There can be contra entries. Contra entry means where cash is withdrawn from bank to cash or where cash is deposited into bank. You have to show in both the sides of cash book. There you have to close the ledger folio column with C mark. Now there are transactions involving discount. Where there are cash transactions involving discount, that will be to be posted in the cash column or bank column wherever is needed, and then in the adjacent discount column the discount should be shown. Now look at the end. At the end of the period, this cash book of Sabu is balanced, closing balance. Okay, in cash column the total is more in cash column. So total is more in debit side. So cash account has debit balance. Just be carried on credit side. Look at credit side of cash book, January 31st, end by balance carried on 27,950. Then only the totals of both sides in cash book will be equal, means cash account has debit balance. This balance is to be brought down to debit side on February 1 as to balance brought down 27,950. In bank columns, the total is more on credit side. So shortage is in debit side, 9,700. So see the last entry in debit side. January 31st to balance carried on 9,700 bank column. Then totals of both sides become equal. So this balance is to be brought down to the credit side on February 1 by balance brought down in bank column 9,700. That means bank account is overdrawn. There is overdraft, a liability to the firm. In purchases day book and returns outwards book, slide 12. In purchases day book, there is only one credit purchases of goods to be shown. On January 6, Joji Traders 42,000. In returns outwards book also, there is only one purchases returns, goods returned by Joji Traders on January 12. No other posting in these two books. Sales day book and returns inwards book on slide 13. In sales day book, there are 4 credit sales recorded. Rollins, Jameson Company, Khan Brothers and Rajan Company. The total credit sales for the period is $120,100. In returns inward book, that is sales returns book, 2 sales returns recorded. On January 13, Rollins $900 and 27 Jameson Company $1,000. Total returns inwards during the period is $1,900. Okay, this lecture comes to an end. I hope the recording of transactions in special journals is very clear to you all now. Thanks for the participation till the end. Please subscribe if you have not done so far so that you can get all the lectures in time. Please share to maximum to your friends and relatives. Your comments are highly appreciated. Thank you once again.